Does the government want you to take money out of your 401k? We'll talk about that coming up. Hey guys, it's Austin from Austin and Jeanette, and today I'm talking about why taking money from your 401k is a bad idea and why the government wants you to do just that. So I'm sure we've all thought about it, right? We're sitting around broke, stuck in the house during coronavirus, and we're like, man, I needed some extra cash flow, right? The media has been putting up all these different things about how you can take money from your 401k and now's the time to do it and things like that. I'm gonna go over why the CARES Act is a bad idea and why the government needs it to happen to actually stimulate the economy. You can withdraw money from your 401k under three circumstances. One, you get sick from COVID-19. Two, a family member gets sick from COVID-19. Or three, job loss. But when it talks about medical expenses or expenses from COVID-19, it's a very big gray area. And job loss is just job loss. So let's go over the metrics on how much you can take out. So normally you'd be able to take out $50,000 from your 401k and incur a 10% penalty. But under the CARES Act, you can withdraw $100,000 from your 401k and incur no penalty. So that there is some kind of benefit there, or it's incentivization of it there, but I'm gonna go over why it's a bad idea. So if you or a family member is sick from COVID-19 or you've incurred job loss, then the chances of you being able to pay back $50,000 to $100,000 or any loan you take out within the next 3 years is, I would say, minuscule, right? Unless you have all your finances in order right now, there's a low chance you're going to be able to pay that back in 3 years. Now, I'm not trying to be negative Nancy. I'm just saying, if you have your finances in order, you shouldn't be taking out a 401k loan. And if you don't have your finances in order, you're probably not paying it back in 3 years. So the government's banking on people not paying their own loans back. And there's no creditor involved. You're basically incentivizing, you're becoming the bank, you're loaning yourself the money, and then you are not going to pay yourself back. You're going to incur heavy penalties. I think it's like 30%. Because if you don't pay yourself back, you're going to get taxed on it. Another reason I tell people not to do this is because of how risky it is. You're banking on not losing your job or becoming furloughed in the next 3 years. If you default on it, it will be due within 60 days. And if you lose your job, it will also be due in full within 60 days. You're also kind of robbing yourself of your future because you're taking away compound interest that could be compounding into the future. I know the economy right now isn't going to be the greatest, but the only people who get hurt on the roller coaster are the people who jump off. So now I want to talk about why the government needs you to do this. So there's only three ways to stimulate the economy. And I learned about it in a video by Ray Dalio that I'll link up here. And basically he goes over like a layman's terms version of how the economy works. So if you don't know like exactly how the economy works, the things that go into balancing the current economic debt, you can check that out. Basically, you can either print money, which is inflationary, you can redistribute money from the wealthy by taxation, or you can lower the interest of things, just like housing. So basically, if you haven't already seen, America has hit all-time lows in mortgage lending, and some people are getting APRs of 0%, whether it be cars or mortgages, and that's to stimulate the economy. So people take out more money, they put more money into the system. So another reason why the government would want you to take out your 401k is because they want you to take that money out and spend it on excessive things inside the economy. Because of that, COVID-19 expense is such a gray area. There's no regulation on what truthfully a COVID-19 expense is. It could be a car, so you could go work for Uber Eats or something now, you know what I mean? There's not a whole lot of, if you read the CARES Act, there's a lot more gray area than you'd think. So to buy time in the economy, basically they want you to take your money out of your 401k where it's being held up and locked away inside the money prison until you're 55, and just be able to utilize that now, spend it now, incur interest in the future, basically give a loan to yourself and stimulate the economy. Yeah, so please, please, please do not borrow from your 401k. If you need any help with your finances or you need to devise a better plan on your way forward that can maybe help you and prevent you from borrowing from your 401k, me and Jeanette are here to help you. And yeah, we're always here for you. I hope this helps, and I'll see you in the next one.